Welcome to the Let's Talk Property with MFS podcast. MFS are a bridging loan and buy-to-let mortgage provider and not a financial advisors. The opinions expressed in this episode are personal to the host and guest and may not reflect the views of MFS. Welcome to another episode of Let's Talk Property with MFS, the podcast that covers all things property. And today we have Ranjan from Succeeding Property joining us. Thank you, Ranjan.
Thanks for inviting me.
And today we're going to be talking about portfolio landlords because you're very well known within the industry. You teach a lot of people about becoming property or portfolio landlords, should I say. So, I mean, it'd be good to hear your journey. Was it something that you always planned to do? Was it something you sort of fell into? How did you get into the property market and get to where you are now?
I think to cut a long story short, I don't know, property is something that always made sense to me. It's a lot of what people find they have to learn, I've always found as common sense. I was bought a Monopoly set at the age of 8. I was addicted to it, and it just made sense. There's a logic to
now real life Monopoly.
Playing Monopoly. Interestingly enough, the Monopoly, the board game, was invented by a professor from some American university who did it to show how bad capitalism was. But she was horrified that it became a runaway success because the natural mindset of people is very capitalist.
Yeah.
But that's an aside. I mean, Monopoly makes sense. You don't do anything by just passing go and getting your £200 salary. You get somewhere by buying property, buying income-producing assets, developing them by putting houses and hotels on and so forth. And it just made a lot of sense. And as soon as I could, that's what I sought to do in real life.
Amazing. So, I mean, it's a bit of a minefield at the moment. And obviously you deal with a lot of people that are coming into this market. I mean, what your thoughts on what's going on at the moment? Do you still think it's difficult for people to purchase and buy properties? Or do you still think there's some amazing opportunities out there for the more informed investor?
I've been doing this since 1990. And I've bought property in every single year since then. So, there's no such thing. There's no such time that it's bad to buy property. It's having the right deal.
Yeah.
That you have a plan for to create the opportunity from that deal.
Yeah.
That's pretty much it. So each time has its own challenges.
Yeah.
Nothing in property lasts forever. So when I started in 1990, what I was doing back then, the strategies that worked for 5-6 years, they worked for 5-6 years. Then regulations change, then tax rules change, then market demands change. So you have to change your strategy. You have to adapt all the time.
Constantly evolving with what's going on within the market.
Yeah.
Do you think it's a bit more difficult now than previous years, or do you reckon it's sort of not a huge amount's changed, but a few bits and pieces people having to tweak and look at?
No. I'll tell you to cut a long story short, I'll tell you the one reason why this market and the market we're entering now is the best ever, because it has been for so many years a seller's market.
Yeah.
I find it difficult to do business in a seller's market because I am looking at a spreadsheet, I'm looking at an emotional set of figures to decide whether a deal is worth doing. And sometimes you're bidding against 5, 6, or even 20 other people who are so keen to do a deal, they're getting emotional about property investment and they're overpaying for stuff.
Yeah.
Now we are going into a buyer's market. And a buyer's market is where a lot of people get a little bit scared and frightened, but the people who are backed by the knowledge of how to play this game can do it based on a spreadsheet and not have silly emotional people outbid.
Yeah.
There's a massive problem with the seller's market because I see people who do deals which I wouldn't do in a seller's market.
For the sake of doing the deal.
Yeah, wafer thin margins. And you know what they do? Sometimes they succeed simply because the market has risen in the time it's taken them to do the deal.
Makes sense.
So they're taking a small office building, making a few flats out of it. 12, 15 months later, the market's risen anyway. So all their estimated gross development values were a little bit more than what they anticipated going in, and that's got them out of jail. Now you're in a market where if you're doing a deal today, there's a good chance that GDVs, you have to factor in a 10% fall from where they are now.
Definitely.
In your end game. So it doesn't mean that you can't make money. You have to work back from your GDVs, look at what is my GDV going to be at the end of this scheme? What's the profit margin that I want to get out of bed? What are my costs? And then I've got my buy price.
Fair point. And I think that's, it's sound advice really. And funny enough, I was speaking to someone previously that said the exact same thing, GDV minus 10%. because then you're being a bit more sensible with the
Yes.
numbers, and then if you do get a bit more than that, happy days. But then you're not really too worrying. You rather drop it day one instead of when you come to sell and everything else. So, I mean, there's a lot of people out there that currently own maybe one property at the moment that would be looking to move into the portfolio sort of space by getting more. What sort of advice would you give to these people moving in? How they should be like funding it, sourcing it? What sort of advice would you give people that are looking to move on to their second, third, maybe fourth property?
I think it's important to have a strategy going forward.
Yeah.
I think the big problem now compared to say 15, 20 years ago is that bog standard vanilla buy to let is pretty much dead.
Yeah.
You cannot say, buy a flat and then just pay service charges and rent it out and make a profit.
No.
So there has to be some strategy there. And usually the strategies that work are about having multiple rental units under one roof. So it's intensification of the site, of the cash flow from the site that you got. So that can be HMOs. There's some challenges in houses of multiple occupation right now.
For sure.
Or, as I think is the best strategy right now, focusing on CMOs, which is commercial buildings in multiple occupation. And what I mean by that is you take a formal commercial building, like a shop and uppers or a small office building and that kind of stuff. You use permitted development rules to convert the maximum spaces you can to residential use. And what you're doing is you're converting them into self-contained flats. So we've got a scheme at the moment with, for example, in Leicester, we've made 8 one-bedroom flats. We've got one in Amersham, we've made 4 one-bedroom flats. So you've got 4 one-bedroom flats under one roof.
Yeah.
But there's no HMO licensing or any of those regulations. There's no landlord utility bills to pay as such, because what you've got is 4 one-bedroom flats under one rooftop let on ASTs to single tenants or couples. So you've got the benefits of having multiple units under one roof without the legislation that comes with renting out rooms as your multiple units under one roof.
Because the HMO market has gone up quite significantly. We as a specialist finance lender are seeing a lot of people move into that market because, as you were saying, the vanilla buy to let, there's not a huge amount of it out there anymore. So people are looking, especially with the affordability, the stress testing that's going on. We are seeing a lot more HMO deals than we'd ever seen previously, as well as the converting commercial into resi. Because
I think with the HMOs, the big thing is how landlords have done their billing for the utility bills. The all-you-can-eat buffet for utilities doesn't work. You have those sort of HMOs, and tenants turn down the heating by opening the window. That's if you've got that sort of model.
If it's all in one bill, like you said, you have the heating on, windows open, TV blaring.
Exactly. I mean, I feel very fortunate that we've done HMOs, but I haven't done one in recent years. But all the HMOs we've done have had separate meters. They're all, first of all, they're all electric, so there's no gas.
No gas.
But every room has their own meter, and every room has their own ensuite. So they actually pay their own electricity charge, which means that as bills have gone up, we have been shielded from that. And I find that when people have protected themselves against that risk, they're doing a little bit better. This is a massive issue, of course, and it's not just that, it's people coming out of fixed rate mortgages. So landlords coming out of fixed rate mortgages can see their mortgage payments double. And coupled with the bills, there can be a real issue about whether some HMOs are even viable.
It's amazing, really, isn't it? And I think it's a very key thing that you just said there that people need to look into, because most people are looking at it think, right, it's a HMO, 5 rooms, I can rent them all in an AST. What's the worst that can happen? But you've got to take all these new things into account, especially if the electricity, you've got, whatever other charges come with it, and they can just completely obliterate any profit margins that you've got. Do you think people need a long-term plan still, or you need to have sort of a long-term plan but keep reviewing it to keep up with current market conditions? What are you advising people to when they're planning?
Absolutely. I think one thing I read is that in Japan, for example, it's quite common for businesses there to have a 100-year plan. In the West, that's not the case. No business plans.
I've never heard that before.
I'm not saying people should go that extreme, but I think the big thing with property people is that people don't think what their exit is going to be. Ultimately, how are they going to exit? A lot of people may get into HMO. I had HMOs in my 20s and all of that, but whether you want to be doing that you know, as you get older.
There's a lot of moving parts.
There's a lot of moving parts.
Yeah.
And I think property is very much like that. There are certain strategies that you do in property to get into it and to get that cash flow.
Yeah.
And then once you've built that cash flow, you have money to invest in actually producing cash flow from assets which are a lot easier to manage.
Yeah.
So I see that journey happen a lot. So I started off with things like HMOs and stuff where the asset management task was a lot more intensive because it's easier to get into. The barriers of entry are much, much lower.
Yeah.
And then use that, if you like, to invest in property income streams which are far less stable. You know, if you have a commercial unit let to a pizza franchisee for 20 years, they're paying quarterly rent in advance. Yeah. You've just got no management
risk away and
issue at all. They're looking after it. They're doing everything. But investing in those sort of assets, there's a greater barrier of entry to get into. So I think the big thing is to have that plan, is to know that what you're starting out doing is not going to be what you're ending out doing.
Yeah.
Have a plan for how to exit and have some rough milestones of how you're going to transition your career and move up the game and generate simpler cash flows. Because like with HMOs, quite frankly, there's only so many you can own. Most people stop at a certain level.
Yeah.
Because either they're doing it all themselves, which they shouldn't be doing, or they are managing a massive team of people to do it for them.
Yeah.
Which also has issues.
Yeah, more people, more problems, more, like you say, more stuff to deal with.
Yes.
And I couldn't imagine owning like a 150-room HMO portfolio. The logistics or something like that must be.
It's a lot, and what I tend to look at is, okay, let's look at the rent roll from say 150 room HMOs, and look at the effort that you personally have to put in.
Yeah.
And a team. You know, it's not the wage bill that I'm too bothered about. You've got to manage people.
Yeah.
And you've got to run that operation.
Which takes up your time.
Which takes up your time no matter what.
Doing other stuff that generates you more money.
And then when you look at, say, that rent roll, there are other ways of achieving that cash flow from simpler to manage property assets, which don't involve that amount of people, team, infrastructure.
Makes sense. I mean, we've spoken about it a few times recently, but you know, there's a lot of people looking at sort of the monopoly effect, which is quite good considering you spoke about previously, where, like you said, they're taking 3 smaller units, which are a bit of a headache, either selling them to then purchase 1 unit, which can provide the same income, except you're managing 1 building, you've got 1 tenant, and it's, again, you can still get the same result. But like you said, you've got to start somewhere with the smaller properties, and you can sort of bunch them together, buy 1 property that gives you the exact same outcome, but then you've got, you know, less outgoings, less management, less everything.
That's exactly it. I mean, one of the things I do a lot of training for people that want to take their property portfolios to the next level. And a lot of people have gone through the process of incorporating their portfolios into a limited company.
Yeah.
And by doing that, that gives you a lot of freedom. Because if you own properties in your personal name, and you may have bought something 15 years ago, like a leasehold flat in someone else's block, but you don't sell it because of the capital gains tax problem.
Yeah.
But once you've incorporated your portfolio into a limited company, you can then have a strategic look of what you've got and say, look, these properties that I started my career with were great then, but I really need to ditch some of those and invest that money within the company, but in simpler to manage assets which generate me the same cash flow or more.
Sort of a refresh.
Exactly.
So is that something you regularly do, sort of every few years you'll reevaluate your portfolio and maybe drop some stuff out, or, you know, mix things up a bit maybe? Is that what you generally tend to do?
Well, of course, because over time, certain properties become dogs, you know, simply because the economics no longer work.
Yeah.
A classic example of that, for example, is we've got a particular HMO building where the council has decided to assess each room for council tax individually. Now, the economics just don't work with that. And, well, they do work, but not at the profit level compared to what I can take out of that property and deploy into another asset. So you have to kind of have a little rethink.
Got to weigh up your options and sort of keep an open mind. Again, there's a lot of media in the press at the moment, i.e. landlords leaving the market and everything else. Do you see this as, you know, some people are saying, oh my God, landlords are leaving, but you know, as well as I do, the only people that are going to be purchasing these properties are other landlords. So do you see an opportunity there for?
Of course. But you know, landlords leaving is not new. I started in property in 1990, and this was just after a massive recession in 1989 and all the rest of it. It was very early. I mean, when I bought property in 1990, I was buying property every 4 or 5 months, and every 4 or 5 months, property prices were going down. I was just buying from motivated sellers, getting good discounts, locking profits in when you buy and that kind of stuff. But many of the people I was buying from were retiring landlords, because this is just human psychology. We're all on this planet for a certain amount of time.
Yeah.
We all have certain energies for a certain amount of time. So I think property investors and landlords have a certain amount of property cycles in them. You know, if you're thinking about it, if you're 65, 70 years old, and you're in 1990 or even today where you perceive a recession, you know it's going to bounce back. You know it's going to bounce because the property market is cycling.
Yeah.
But are you going to sit it out for 10 years waiting for that?
Wait for the next cycle.
And then be, not 70, but be 80? Or are you going to say, well, I'll cash in my chips. I've made something now, and now is the time to sit on a beach. So it's just human cycle. It's not, it's very simplistic to say landlords are getting out. A lot of landlords are simply getting out because at this time of the cycle, a lot of older landlords leave.
Yeah.
And then at the other end, which is new, we're having accidental landlords who just had 1 or 2 properties, who never intended to be a landlord. I got a job in Dubai for 3 years and I rented out my house or something.
Yeah.
Those sort of people. Those sort of people are selling out because the regulation and the taxation system encourages people to do it as a business rather than in an amateur way.
Yeah, and I think you will see accidental landlords, a lot that I've been hearing about over the last sort of couple of months, especially when it comes to people exiting the market. And, I don't think it's a bad thing. Like you're saying, people's life circumstances are different.
Mm-hmm.
I know if I've got a portfolio at the age of 70 and something like this is going on, I'd rather, like you say, get rid of it. I've probably made a fair bit of money if I've owned it for 20, 30 years maybe, and just sort of have a relaxing life. Same as most people, they plan retirement in a normal job. So I think it's a very similar thing to that. What are your views on rates at the moment? Is that affecting you much at the moment? Interest rates obviously higher than they've been for some time. You deal with a lot of people that are coming into the property market. You finding those sort of people are a bit worried, or they still see as it?
I think interest rates, it's a good question. I mean, interest rates is normalizing. That's the way people have got to see it. They have been artificially low. And people... I think the people who have thought that the low interest rate environment was the norm and leveraged to the max with investment property, they're stuffed.
Yeah.
But I think sometimes lenders are in the business to lend, and they will lend whatever the regulators allow them to lend in many cases, in my view. And then then sometimes what happens is that the investor has to be responsible. So there were cases where I've been offered loans, 75% loan to value at very, very low interest rates. But I'm not But for those sort of areas, I'm not taking loans of more than 50% loan to value. There's no point, because that these loan rates are not normal.
No.
You've got to plan for normality. So the people that haven't, yes, are stuffed.
Yeah.
But the people that thought that those rates were abnormally low and geared accordingly will be fine.
I think it's more the seasoned investor that has, someone like yourself that's been involved in it for a very long time. We're used to paying 12 to 15% on mortgage rates, and it's still cheap in your eyes. But then it's the new era of people that have only been used to these lower interest rates that think, right, let's get going.
It's also a principle kind of thing as well, because I think a lot of people have been in this habit of prices go up, so I'm going to remortgage as much as I can, draw that money out, and use that to invest.
Yeah.
Now, that's one strategy, but the problem with that is you've always owe it.
Yeah.
That's always debt that you owe, and you have to repay that debt in full or service the interest at whatever interest rate is the prevailing rate, and that gives you uncertainty. But the thing is, if I don't refinance, if I have lower borrowings and I make surplus cash flow, then that surplus cash flow is mine to invest. It's mine to invest as an equity investor in other projects or whatever. Yeah. I don't have to pay that back to anyone.
No.
And that is how you generate long-term, stable wealth that is difficult to have taken away from you.
Now, buying property can be very daunting for people first coming into it. Obviously, everyone, you normally buy your first home, which is an experience. But then, when you buy an investment property, what sort of advice would you give people when moving into the investment side of it? What sort of key pointers should people be looking at?
Well, today it's to get trained up. It's to get knowledge.
Yeah.
You've got to do it with the knowledge because, there is an argument that in a booming market, you can do a little bit of a random walk, give it a go, and the rising market will mask some of your mistakes. And
Yeah.
there is an argument for that. But in a time where you've got real challenges, if you're doing a development, it's likely that your finance costs will increase over the life of the project.
Yeah.
It's likely that build costs will increase over the life of the project. It's likely that the end values will be down than you originally estimated. So, when so many of those variables, there is just no margin for error. How do people expect to just buy something and hope for the best? It's just not possible without training, without knowing exactly step by step what you need to do to actually make the project a success.
Yeah, I strongly believe in that. It's not something you just have a go at. You just sort of dabble at. You've got to really engross yourself. And I think there's amazing, people like yourself who succeed in property are providing the information to make these investors informed investors. And MFS, we're huge on education as well, because it is key to, people getting involved in the market. I still do lots of research. I listen to a lot of podcasts, follow market trends. There's so much free information available for people out there. And you do things like you do the Baker Street Property Meet, where again, people can come speak to other, seasoned investors.
And that's essential because it keeps people current. Because
Yeah.
there's so much, what we aim to do there is that, there's so much change going on. I've never experienced a time when there's so much change in property and there's so much stuff in the news all the time that people need to understand not the spin, but how it's going to affect them in their property investing journey. And that's really what we try to sort of share with people on that.
And you touched on media there. There's a lot of negative media at the moment on landlords and, just the market in general, because, bad stories sell. What's your views on the way landlords are currently being treated with everything?
I think, landlords do seem to be the whipping boys. And I think there is a very good sort of group of organized people who are objecting to a lot of things. And one of the things clearly in their sights is landlords. The thing is, though, I was at the landlord show yesterday. I confronted a bunch of protesters who had banners and they're saying landlords are parasites and stuff like that. I got, it was my intervention was featured in The Guardian today, so media attention for that. But I got interviewed by a YouTube channel on my sort of thoughts on the whole thing. They seem to be very, very organized about their center of hatred. And when they talk about, I think private individuals who just have done something for themselves, own a few properties, have a portfolio of properties, they're just easy targets. The biggest culprits of poor quality accommodation are people are actually with councils and actually with housing associations. Because the legislation that says you have to maintain properties, decent living standards and all of that, which is, of course should be there. Councils exempt themselves from. They're not, they don't have to abide by those same legislation. So if you've got a leak and you're a housing association tenant, you try getting your landlord to fix it. You won't even get through to the characters, But that doesn't seem to be an area of focus. It is just the politics of envy. And I think we as landlords do an exceptionally bad job of banding together and actually explaining why we are actually essential for society.
I totally agree with you. And I think, again, like you're saying, the quality of council properties, you do see the occasional story in there, but not a huge amount where you've got people living in, young families in damp, rotten homes, places that normal people won't live. but then they're targeting the landlords that generally keep their properties to a decent standard, because that means it keeps its value. You get good tenants and everything else that comes with it. And yeah, you will get the occasional rogue landlord, but it's the same as every industry. There's only a few small that think like that, but the vast majority are amazing.
The vast majority are absolutely amazing.
Yeah.
And there is very much, there's some fiddle stats that are doing the rounds, which don't stand up to any scrutiny.
Yeah. If you ask them a question of where the information come from, what's it based on?
Well, I was interviewed yesterday by this channel, and she quoted some weird statistics. I said, "Where are they from?" And she said, "The Guardian." I laughed. I said, "No, what's your source? I mean, The Guardian is not a source of data. What's your sourse?" She couldn't come up with.
They provided an opinion, basically.
Exactly. It's ludicrous.
Oh God. Well, I generally tend to ask a lot of people this question at the moment that come on. What are your thoughts on what's going to be happening over the next 12 to 18 months, and what's your sort of strategy to get through this next little cycle, shall we call it?
I think there's an element of putting your house in order. So if you've got existing portfolios, make sure your ship is in order in terms of being able to manage short-term interest rates going up. I think they'll come down after this next round of blips, but people have got to manage their way through that.
Yeah.
And they've also got to manage the utilities issues where they're doing, they're paying as landlord and all that kind of stuff. The rental market is holding up very, very well.
Yeah.
We talked about standards and all the rest of it. I mean, there's an inbuilt incentive to having the highest standards, because if you have the highest standard property, you actually get the highest standard tenant, and you actually get upper quartile of rent. Now, this is the big thing that's changed since when I started in property. When I started in property, most people were in rented property as a stepping stone to saving up a deposit for their own house.
Yeah.
And as a result, people would accept lower standard accommodation to save maximum deposit. Now, people do not see buying as something that they aspire to for all sorts of various reasons. It's not just affordability. The whole mindset about
lifestyle
buying exactly has also changed. So what that means is people don't want to live in a dive. They will pay more for the experience and the service.
Yeah.
And the key thing is the service that they. I mean, one of the big questions we get from prospective tenants is, "What is your service?"
Yeah.
And then we explain to them, if you want to report a problem, you go to our website. It's a pictorial thing where people can, report the problem. They get an answer.
Makes it easy for people.
It's very, very clear. They can do it on their phone and app, and when they see all that sort, they like that.
Yeah.
And one of the questions I got asked: do you think it's right that companies or individuals own more than one property? And I said, well, do you think British Airways can provide a decent service if they only had one plane? Could they offer the variety of routes? Could they offer you the backup service? Could they have enough airfare to put the investment in the infrastructure to service those passengers well if they just had one plane?
Of course
Why
not.
does it make sense for us to offer a rental service with only one property?
But where are these properties going to come from? Who's going to provide the properties for this?
I think that's that is one of the questions, and that's a central government question. We're not building enough. The planning system's a joke.
Yeah. It's getting worse as well.
And it's getting far, far worse, NIMBYism. But I would say that of all the rental units that we have created, actually since 2013, the only rental units we have created have been out of defunct commercial buildings. So we
repurposing.
Repurposed. When you've got an eyesore of a commercial building, some with broken windows, fire damage, this, that, and the other, it's got no economic use. It's an eyesore.
Yeah.
And you're taking the fabric of the building, the foundations, walls, windows, roofs, which is already there, and repurposing it to something, and it suddenly becomes homes for people.
Yeah, I love all that. That's one of the favourite things that I'm seeing, trends that are bucking up, is people turning these old derelict buildings, which are an eyesore on a high street or whatever, turning it into something that's new, purposeful, and looks really great. So I love the fact that that's one of the main things that you're doing at the moment. But I just wanted to say thank you so much for coming on. It's been an absolute pleasure. But also, would you be able to tell people where they can find you?
Definitely. I mean, the easiest thing is to find me on YouTube, Succeed in Property. Put out a lot of videos on there.
Fantastic.
Generally, my approach to property investing, commentary, and we try to just keep it real and keep it current for
I think that's
people
what
to
you need.
navigate through these choppy waters.
Fantastic. Well, thanks again for coming on, and really appreciate hearing all your wonderful insights and views today.
Thank you.
I'd just like to say thank you for tuning in to Let's Talk Property with MFS today. Please don't forget to comment and subscribe, and don't miss out on any of our future episodes. If you want to learn more about Market Financial Solutions and what we do, please do visit www.mfsuk.com.